Okay, well, there's probably no stock that has been more referenced in 2024 than this one, Nvidia. The AI chip darling caught the world's attention as the growth in the business fueled the stock to lofty levels. Now, more recently, things have been a little more wobbly in the market for technology stocks, including Nvidia, which technically is still in correction mode, having seen its shares decline more than 10% from the peak. But that still leaves it with a huge return on the year. And as we get ready for the company's quarterly results, Wall Street is once again expecting some big numbers for the company. So as an investor, how do you digest all this? Let's get some perspective from somebody who covers the company very closely. Dan Ives, he's managing director and senior equity analyst at Wedbush Securities and one of our great regular guests. Dan, it's great to see you. I think at this stage of the game, it's mid-August. It's a bit slower out there. Everybody's looking for market catalysts. It's hard to think of a earnings catalyst that will be as big as Nvidia. How big is this earnings report going to be in your opinion?
I mean, look, this is the Super Bowl, the Olympics, from an earnings perspective, because it's about the godfather of AI, Jensen Nvidia. That's the best barometer for the AI revolution. Look, we believe it's a get the popcorn out moment. This is going to be a robust one, and I think you're seeing all the breadcrumbs leading to this AI revolution is just starting, despite many of the bears coming out of hibernation mode over the last, call it, week and a half.
So one of the things I think we've heard about as investors have taken some profits in technology stocks, and certainly in stocks like Nvidia, is they've heard from these other technology companies, the big ones that are actually spending a lot of money on Nvidia chips, and they've had a lot of conference call questions about, is that spending going to pay off? Do you need to be doing all that spending? And it almost felt like all of a sudden people were like, oh gosh, the chip business is a cyclical one. And maybe Nvidia with that big lead was ready to be first out the gate. But what if these other companies have to pull back on some of that spending? Is that going to impact Nvidia? Is that going to impact the stock? How are you thinking about that?
I mean, we just got back from Asia, and we'll be there again in the next few weeks. It's unlike anything I've seen in 25 years covering tech in terms of this fourth industrial revolution playing out. And look, they're the only game in town. AMD, Lisa Su, they'll also benefit here. But we're talking about $1 trillion of CapEx that's going to be spent on AI. And I think fighting that is just a tough battle, especially in a soft landing environment, where we think tech stocks continue to move higher, including Nvidia.
Wall Street expects Nvidia to post solid quarterly results as the company is ready to release its fiscal key to 2025 results on August 28, the favorite chipmaker among investors. Strong demand is expected for the company's top-tier graphics processor chips, which are the industry standard for handling generative AI tasks. Goldman Sachs analysts believe that Nvidia's management commentary and supply chain data in the upcoming weeks may bolster confidence in the company's earnings potential for calendar year 2025, despite reports of a delay in the Blackwell chip, which could cause some short-term volatility in Nvidia's fundamentals. Their prediction is that Nvidia's data center revenue would expand sequentially at a strong rate, and they think the market will ignore any negative effects from a change in the timing of the Blackwell ramp. Even though there are short-term challenges associated with Blackwell, this increase is anticipated to be propelled by the robust demand for Hopper-based GPUs, early sales of Blackwell products, and expansion in NVIDIA's networking business. The analysts also point out that NVIDIA continues to hold a strong competitive position in AI and accelerated computing, and that client demand is still high among major cloud service providers and organizations. They point out a number of encouraging signs, including the better-than-expected AI demand forecast from Taiwan Semiconductor Manufacturing, the rise in AMD's full-year data center GPU revenue projection, and encouraging remarks from significant U.S. hyperscalers regarding their intentions to increase investments in AI infrastructure. Furthermore, businesses like Hon Hai and Taiwanese original design manufacturers, ODMs, have reported higher than expected revenues, supporting the idea that there is a significant market for AI servers. The demand for supermicrocomputers' direct liquid cooling solutions from cloud service providers with an AI focus drove the company's latest earnings, which beat forecasts and included excellent guidance. The analysts also note that U.S.-based hyperscalers, who generate over 50% of Nvidia's income from data centers, have persisted in expressing hope for Nvidia's future. Early proof of how generative AI is already helping sectors like advertising has been provided by some customers, demonstrating a desire to overinvest in the short term to establish a leading position rather than underinvest to lose out on what appears to be a sizable revenue/growth opportunity, according to Goldman Sachs. As far as the stock is concerned, analysts see Nvidia's setup as constructive. With a relative premium of just 46%, the company is currently trading at 42x the next 12 months, NTDM. Consensus EPS, which is a considerable discount to its previous 3-year median of 151%. In summary, we think there is a good risk/reward ratio on the company, with our most optimistic scenario suggesting an 89% possible upside and our most pessimistic scenario suggesting a 61% potential fall. The analysts retain a $135 price target and restate their buy recommendation. Additionally, Nvidia's share values are rising in this whirlwind, much as the Las Vegas Strip does on New Year's Eve. So let's dive in, but first, if you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the markets. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
What are you going to be watching when the company does report its quarterly results? Those are scheduled for now less than 2 weeks from now. What are the key things that you're going to be watching? What do you think matters most to the street?
I think it's really right what the demand trajectory looks like. Are they seeing more order flow? We don't believe this is double ordering. It's actually the opposite. And then, of course, in terms of the new chips, any sort of delays, call it 6, 7, 8 weeks, that's not moving the needle massively. Look, this is probably the most important earnings call and conference call in the last few years because of where we are as a market needing to get the barometers. But what I'd just tell you, look at Microsoft in terms of what they talk about from Azure acceleration. Look at Palantir. Look at Google. Look at ServiceNow. I mean, all the breadcrumbs are leading to what I believe is just going to be more strength. We saw that from AMAT as well today.
Okay, so another question, maybe a version of my earlier ones that I'm sure you get all the time. People will put up graphics or headlines and stories saying, "Are we witnessing an AI bubble?" Based on what you're saying, I would guess that you do not feel that way. But if you don't feel that way, what have you made of those headlines, and what's the counter argument to those who say, "Come on, these stocks have gone too far, too fast"?
Yeah, and John, me and you've talked about. I covered tech stocks in the '90s, so it's not like as someone that went through it, the bubble and burst. Now you're talking about companies that have $1 trillion combined on the balance sheets in terms of big tech. We're not talking about startups in terms of that environment where everything's kind of in the future, and this is what I believe is the fourth industrial revolution. That's why I think this is a 1995 moment, not a 1999 bubble moment, especially as numbers continue to move higher. And look, you could show the Nvidia chart relative to Cisco in the late 90s, 2000. I think it's an apples to oranges. And that's why when you hear from the godfather of AI, Jensen Nvidia, and you see the trends and the demand, that to me is the most important thing.
The list of Jim Cramer's hottest 10 stock picks is something we recently put together. We'll compare Jim Cramer's other recommended stocks with Nvidia Corporation in this article. Jim Cramer discussed what he believes to be Wall Street's biggest mistakes this earnings season in a recent Mad Money show, particularly on a day when the Nasdaq increased 0.2% and the Dow fell 141 points. Cramer drew attention to the false narratives propagated about how GLP-1 medications have affected food and beverage firms, the resistance to price reductions following the pandemic, the doubts around investments in AI, and the enduring notion that Intel still holds a strong position in the IT industry. Cramer contends that businesses would acquire credibility and possibly see an increase in stock prices if they were more forthright about their evolving circumstances. Instead, they confuse investors and increase the likelihood that they will make bad judgments by hiding crucial information. Regarding AI, Cramer vehemently disputes the assertion made by Wall Street that investing in the technology is a waste of money. He notes that a common misconception is that large corporations investing extensively in AI-related video processors are merely making these investments to stay competitive, rather than realizing any meaningful rewards. Cramer also questioned the widespread perception that Intel is still at the top of its industry. He rejected assertions that the business is ready for a significant resurgence, especially in data centers, and that it has a chip that can match the supremacy of its rivals. He cited the company's choice to reduce its payout last year and delay the remaining amount this year to highlight how the company's financial health presents a different story. Despite what the corporation may say, Cramer cautioned that these moves do not indicate dominance and that this is not the same semiconductor company as it previously was. So what does this really mean for Nvidia's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoy them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Question, if people are trying to get a sense on Nvidia's lead, and we have this same conversation with all sorts of sectors, like with the weight loss drugs, we talk about how, like Lilly and Novo Nordisk are doing versus any of the other drug makers that want to catch up. We do know that because Nvidia has high demand for its chips, and these aren't cheap, that there's big technology companies that are trying to develop rival products. But what does the competitive landscape look like in years to you right now, if you had to guess?
I think they're 2 years ahead. Now, AMD, others will get a piece of that share. So there's going to be others that benefit from a chip perspective. But look, they're playing chess and others are playing checkers. I mean, look at Intel. I mean, if you look disaster up in the dictionary, you'd see that ticker. So they continue to just have such a massive lead. That's why it's almost been the Usain Bolt of AI.
The increasing need for AI will benefit Nvidia greatly, especially as more businesses and academics commit to its development. The primary driver of Nvidia's income is the ongoing expansion of AI training in data centers. Even though artificial intelligence, AI, technology is predicted to progress rapidly over the next 10 years, Nvidia's commercial future is already bright due to the current demand. UBS analysts are quite confident in Nvidia's future development, projecting a 27% increase from the company's present $118 price to a forward price-to-earnings ratio of 54. Jim Cramer highlights that Jensen Huang, the CEO of Nvidia, has been assertively saying that investing in Nvidia processors can potentially provide triple profits. He emphasizes that this is a fact rather than just conjecture, and queries how much money has been made by those who have wagered against Huang's forecasts over the years. On our list of Jim Cramer's recommended stocks, Nvidia comes in third overall. Although we recognize the potential of Nvidia as an investment, we are more certain that undervalued AI stocks have a stronger potential to provide larger returns in a shorter amount of time.